Hello everyone, what's going on? Welcome to my channel. Welcome to the Smart Investor. Why is it important for you to be here today? Because today we're starting a new week and things are looking up. Things are looking up. The market is green and I like it. The market is green because it was red last week. Now, does this mean it's going to continue? We shall see. But basically, we are waiting for Wednesday and Thursday and Friday. We got some inflation numbers. As I said, this market needs to be monitored daily. But it's also important to understand what it is that people and the pundits are saying. As usual, like I always, as I always tell you, we're not trying to predict the market here. We're trying to understand what's happening. We're trying to understand the players. We're trying to understand the market, the way it moves. And we are trying to understand the story. These are the three important ideas that you need to get yourself around to be able to understand what's happening. You need to understand what it is that the story of you being told. Remember, the market is like a child. So you need to make sure you tell the children and the child a very good story. And a story is being told. The story right now is that the market is ready to vomit on anything that resemble recession. That is too much. That is too much. There is no such thing as nothing is going on right now. So what we need to know, and obviously the story develops, every second, so literally. We're not going to do that every second. We're going to do that every day. We're going to try to figure out where is it that it's moving. So right now we are vomiting every time we hear anything having to do with negative story. Right now, there's nothing really happening until Wednesday and Thursday and Friday. Now, keep in mind that those stories, the stories, the news that comes out in terms of economic news have little to do with reality. Like, keep that in mind, okay? And second, it has nothing to do with actually what we think is happening, because the data itself is not correct most of the time, as we've seen it in the past, right? We've seen it twice already. Data is not real. Data is not accurate. So keep that in mind for a change. So what is it that we're really doing here? What is it that we're really doing? Well, to be honest, what we're doing is we're playing a game that is called understand price risk, with some notion of credit risk tied around what is the Fed doing? Are we in a recession? What do the earnings look like? But at the end of the day, they've got all that money that needs to find a home, and it needs to find a home, and it's going to find a home, or it's not going to find a home, but it's going to be moving around. It's going to be volatile. And that is something that is key to understand. So, like I always say, understand the player, understand the market, and understand the story. Okay? So be careful. So let's talk about the player. Let's listen to who's talking to us right now and what are they saying. That is what we need to understand. Joe, roll up the first video.
Candidates to have an economic campaign platform, but it's quite another thing to have a recession on your hands if you win the election.
Oops. Remember, who are the players? Obviously, this channel, we know where they're leaning, and for reason that have to do, we'll see. The point is that the word is out there, recession. And what's the angle there? Well, obviously, they're going to try to push you towards what they feel are the signals for recession. And that's why I mean all the time, you need to understand the players.
Here is what the candidates have to say about their take on the economy. Roll it.
My vision of an opportunity economy is one where everyone can compete and have a real chance to succeed. So I want to see 25 million new small business applications by the end of my first.
What do you expect him to say? Do you expect him to say everything is great? Do you expect him to say that we have a good or strong economy? Then what do we need you for? Let's keep the other guy in, okay? Now, at the end of the day, do we have a problem? Well, I hate to say it, but so far, everything that we are looking at seems to be quite encouraging in terms of a slow landing, a soft landing.
The radical policies of my former opponent, Joe Biden, and my new opponent, Kamala Harris. Kamala Harris wants to sacrifice our wealth, kill the economy, and drive jobs over.
I mean, she wants to kill the economy, and she wants. I don't think that anybody wants to do that. Does he want to take over the country? I don't think that either. So, and this is what I mean, without taking sides really, but it's important for you because they've got jobs, right? She's got a job, he's got a job, and they got plenty of money. It's up to you now. What is it going to mean to you? What are you going to do? So you need to understand, you need to, obviously they have influence on the money system, on the financial system, on everything, right? But you need to understand what it means for you and what they're really saying and how to take advantage of what they're saying because they're moving the market. But yet you can't always believe that, not that they're lying, but what they're doing is they're accentuating a point towards their point of view.
To punish businesses.
So let's get the read from our all-star panel. And that phrase is thrown around a lot, but these guys are the best of the best. There's no question about it, to discuss the state of the economy and consumer trends. Joanne Trattoria owner Joe Germanata and Apple Metro chairman and CEO Zane Tankel are here.
I have no idea who these guys are, but it looks like they're well-dressed. It looks like they made some money for themselves. So we should listen to what they have to say. And what are they going to tell us?
Thank you. Gentlemen, what a pleasure. You're not only great men in your business life, but I know you both very well. I go to church with Joe and I go to dinner with Zane.
You do.
There you go. All right, Zane, let me start with you. What do you
By the way, you go to temple with me if you like.
Thank you. I wouldn't mind that at all. You know, of course, we start with the Old Testament.
Okay. All right. I'm not going to comment on that. No need to comment on this small talk.
In the Catholic Church. You just sold your Applebee franchise. You had how many? 30?
40. Well,
40.
Yeah.
Okay, you had 40 Applebees. That's quite a holding. First of all, are you glad you got out when you did? And secondly, what do you make of this overall economy based on what we saw in the jobs?
So Applebee, obviously, we're going to look at recession. We're going to look at the restaurant business. Now, keep in mind that I've seen, last week I showed a video. In fact, I will prop it up again so you could see that information. But basically, we have, the restaurant business is doing okay in New York. I mean, let's take a look at daily data for restaurant bookings. As you could see from 2020, obviously we had a huge drop, but I don't know, feels fine to me. So let's see what he has to say about this.
Yeah, I'm glad I got out when I did, except I miss the people and I miss the mission, which was to be the best restaurant company we could be. But I'm glad because it's a very, very, iffy economy. We're totally consumer reliant.
Well, hold on. It's a heavy economy. Okay, what does that mean? And we're totally consumer reliant. Yeah, I know. Well, that's a good thing. And right now, the consumer is doing just fine. I just hate to say that.
69% of the total economy is driven by the consumer. Mm-hmm.
So what's wrong with that? That's good. And we're doing great right now.
It's showing early on signs of a softening, a weakening. Walmart sales, you've seen, I'm sure, down. Home Depot's down. Credit card debt.
Well, I thought Walmart was doing pretty well actually, and if you look at their stock, it's doing great. I don't know what you're referring to, but you're in the restaurant business and you're commenting on Walmart. So you're giving some comments about the industry, the as a citizen, I guess.
It's through the roof at over $1 trillion. Credit card defaults are. So we're seeing these early on signs, these road signs. Where do you drive your car?
Yeah.
I'd get off and park.
Wait a second. So these are your signs. So Walmart sales are down, and people are borrowing heavily, and credit cards out of control. All right. So let's look at some data here. Let's take a look at the weekly bankruptcy filings. Okay, 2020 we went up. I don't know. It feels we're down here right now. So okay. These are Bloomberg, Apollo chief economists, note filings are companies with more than 50 million in liabilities. So, okay, the consumer. Let's take a look at the consumer. Where credit card spending, I mean, it's okay, but it's kind of stable. The consumer spending by sector, entertainment, retail. I mean, right? Weekly consumer spending by weekly by sector. Oh, you know. Okay, but I mean, I don't see some huge problem, according to him.
For a little while.
Now, Joe, you can't get off and park unless you want to sell your business to. Maybe Zane misses the restaurant business.
I just asked him if he wanted to be a partner. No.
But what people are still eating out, right? I mean, people are still have that post-pandemic push to go out and enjoy themselves. But do you see it slowing down at all?
This was the worst summer that we've ever had. It was 50% off last year.
Well, I mean, maybe your business is off. We don't represent everything, right? We're just, you see what we're doing here? We're nitpicking certain areas. You say, well, I'm not doing great. I guess all economy is not doing well, and therefore we have recession.
Oh, man.
Right. I'm seeing more credit card business, as you were mentioning. The credit card business is through the roof. So, and you know, people are buying on borrowed time, as far as I'm concerned. So it's going to end. We're going to hit a wall.
What? You see, you got to be very careful what you say, things like that. We're going to hit a wall because you're in your business, you're seeing people borrowing a lot of money. But how do you know we are going to hit the wall? I mean, all these people at the same time are going to hit the wall. Right now, we're not seeing it. The beauty of this is that you could always, you know, talk about what you think is happening. But are you talking based with facts, or you're just feeding a narratives? And I mean, it's okay, you know, to feel a narrative if that's what you want to hear, right? You want to say, yeah, the recession is no good, so let's get rid of Biden and let's put put Trump in because we have a recession coming and he's going to help us. Now, don't underestimate that. Don't underestimate that kind of talk. But understand where the talk is coming from. You need to understand where the talk is coming from because it obviously impacts the market. Lots of people listen to this. I mean, how many views did they get? They got 87,000 views in 12 hours. I mean, we'd love to have 87,000 views in 12 hours. But that's what people want to hear, and that's what they're basically telling you what you want to hear. But is it really what you want to hear? Because, again, these people have jobs. These people have money already. You need to do it for yourself.
All right.
You must have seen other recessions. If in fact what we're going into is a recession, are there?
He does mention the recession. But he's not a fool either. He's not going to start predicting things. But he said, but if we're going to go into the recession, then I guess
warning signs before, or does it happen quickly? I mean, as I remember, a lot of people were caught off guard by 2008, 2009.
Whoa! Wait a second. This is not 2008 cough of... No, we're not caught off guard in 2008. You know, we saw the housing... I know I was there. We saw the collapsing of the housing. We saw everything coming down in front of our eyes. So you cannot tell me that somehow this is like a big surprise. No, there was a lot of issues and frankly, not so good. But I don't think it's a big surprise. So let's take it easy with this, okay? Let's relax. And you cannot compare this to 2008 because what? 2008 there was no more liquidity in the market. This is not what's happening.
Have you seen, are there any warning signs that you've seen other than the
wasn't-
50% loss this summer?
I wasn't in the restaurant business in
Oh,
08.
okay.
But what I do see is people want more than just dinner. All right, so that's why what we started doing is live entertainment. So we do drag shows, we have bands.
You ever get Lady Gaga?
Okay, so basically he's talking about his business right now. So, okay, just saying. Next, let's move on to somebody else. Okay, so now let's see what kind of focus, right? Focus, and this is 300,000 views, by the way. What kind of focus do they give to the candidates? Let's see what kind of question they're asking to see, the veracity of the plan of these candidates.
Reveals Sky News All-Star James Morrow.
How fake Kamala Harris is. Now, I'm going to play two clips for you of Kamala Harris giving the same speech to two different audiences. Have a listen and see if you can hear the difference in how she speaks to each group. First, here's Harris in Pittsburgh, PA.
Thank unions for sick leave.
Are you serious? So, I mean, not taking side, but I just want to know, is this really what we want to find out from these people? You need to put their feet on the fire. And I don't know if the way she speaks has anything to do with a policy pertaining to the debt. Is she talking about the debt?
Thank unions for paid family leave. Thank unions for your vacation time.
Now, here's Harris on the very same day, just 5 hours apart, speaking to another audience, this time in Detroit, Michigan.
You better thank a union member for the 5-day work week. You better thank a union member for sick leave. You better thank a union member for paid leave. You better thank a union member for vacation time.
Okay, I guess there is a slight intonation. But I mean, do you realize, apart from being with the point that they're trying to make here, I mean, she didn't talk in tongues. She has, okay, maybe a slight swang. Okay, fine, I get their point, but is that really what it's about? Do they think that people are that nimble and that simple that that's what you want them to talk about, the way they talk? We need to know what to do with our money. We need to make our money. We need to take advantage of the market. We're not going to do it by listening to these people. These people are just fine. Trust me. Let's just move on to another one. Next, we are going to take a look at my good friend Ed Yardeni, who's going to set the record straight. Let's see what it says about what's going on in the economy and specifically the market, and let's comment on that. Some good stuff here.
Off, bonds have rallied hard, yields have dropped a lot. Of those two asset classes, which one do you think's too far extended? Which one would you be leaning the other way?
Well, I think the bond yield is getting pretty close to a bottom here. If you look at the peak yield curve spread, so I'm looking ahead already beyond this inversion that we've just seen to how much of an ascent are we going to get in this yield curve. It could be at least 100 to 150 basis points. And so the bond market's discounting lots of rate cuts, and I think that...
So it means that basically that the bond market is a data, and the data shows that the CPI is dropping, but CPI is a mix of energy, is a mix of baskets of goods and services, it's a basket of salaries and a bunch of other things. It's not just one thing. So to that end, yes, I mean, people are not doing that great, but the economy as a whole, I'm sorry to say, is growing, and unemployment is still pretty low.
It looks to me as though the economy is going to be particularly strong this month when we look at August data for personal income and personal consumption. That looks like it's going to be a very strong number, as does industrial production, which...
Well, hold on. So now he's expecting the numbers to come up to be positive. So that's how confident it is. And I know Ed because, you know, I used to know him when he was at Deutsche Bank. And at that time, he was talking about, he was pretty accurate in describing what happened in 1998 and in 1990. So he made a couple of good calls.
We're likely to see some offsets to the auto drop that we saw in July. The auto production dropped significantly in July, which probably just was a seasonal aberration. So you put it all together, and I think we're going to get some pretty good economic indicators here. I think the stock market has had another carry trade hissy fit, as we saw.
Did he say hissy fit? I'm going to use that. That's a great term.
In early August. And that's because the Bank of Japan has announced that they are still on course to raise interest rates. And so the weak employment numbers, perversely, you would think that the weak employment numbers would make the stock market go up. Why? Because the Fed's going to do 50 instead of 25. And that kind of thought really unwound the carry trade once again. And I think that's why...
I mean, the carry trade, what you need to understand, all you need to understand as far as the carry trade is concerned is that basically the Bank of Japan removed liquidity from the market.
Stock market was so weak last week.
Ed, let's pick up on...
And he's saying that it happened twice. It happened in August and it happened last week. That's why, you know, the market kind of vomited twice already.